What's going on, guys? Welcome into the midweek update video with the Wheel Strategy. Today is a massive day in the account. You can look here. Up $836, up 4%. The account's up 4% today. And that is thanks to JD. JD.com had earnings today, and they're up about 16% right now, which is huge because these last 2 days were the opposite. JD was crushed these last 2 days, and the account went down. If I go to a 1 week look, you can see from March 3rd, the account was at like 21,300, and then it dipped yesterday, dipped the day before that, all the way down to 20,850. I was down about $400 over 2 days, almost 2%. That was not fun. And then JD had earnings last night into today, because really it's a Chinese company, so it reported while we were sleeping in China, and then that carried over into the morning, and it was up 16%. So if I go to the positions, you can see JD right here up $350. I was down like $200 or something like that. It was down a lot. Maybe, yeah, about probably $400, because I was down about $2 a share, or almost, and I have 200 shares, so it was about $400 down, $300 to $400 down, and now I'm up $350. Huge swing, and that's why we're up over $800 today. Mosaic is doing well, up $57, but it's just kind of hanging in there. It's JD that really made the huge difference. Now, in terms of other positions, I did make some moves this week. I added a CSIQ cash secured put in addition to what I already had opened. I had one open at 20. I opened another one at 19 for this week. I threw on a DOCU earnings play. I sold a put at 46 for earnings this week. JD covered calls was the same. That was open last week. Mosaic covered call was open last week, so that's not new either. But another new one is SOFI. SOFI, $7.50 puts. That's a brand new name in the portfolio. I only did a little bit. Small exposure, but I'm going to talk about that some more because it is a new name, and it's a popular name amongst the YouTube community and wheelers and whatnot. I was off it for a little bit. I wasn't quite bought in initially because it hadn't been making a profit. As part of my rules, I got to make sure they have positive EPS, positive earnings, and it wasn't doing that until this last quarter. It finally became GAAP profitable. And I was reading into the name. I was liking the story. So I figured I'd take a stab and try to get 200 shares of it. Not a ton of shares. I can get up to 600. I'm only trying to get 200 right now. But we will talk about that when we get to the chart. So we will do that. Let's get to the charts here. I can show you what's going on and go more in depth about everything. So, well, JD's on the screen, so might as well just start with this one. JD, guys. JD. First, let's actually get the wheel graphic up because there is a lot of moving parts. I have a lot of open positions, so this will help you kind of see the open positions at all times. It's on the bottom banner there. My JD, Mosaic, CSIQ, DocuSign, SOFI positions. And of course, the year-to-date totals up $1,300 year-to-date. Doing very well so far as we embark on our third month of 2024, in which I have $0 profits. I haven't closed anything or done any complete trades in March yet this week, so I'm still at $0, but we got a lot of stuff in the pipeline, including JD. So here we go. JD, I own shares at $23.25. $23.25. And on Monday, we started the week down 5%. Horrible day. Yesterday, we closed higher than we opened, but we still opened way lower than the prior day and finished down 2%. So over the course of Monday and Tuesday, JD fell over 7%. And that was tough. Yeah, we were down at $21.50, which is just about $2 below my cost basis. So yeah, I was down about $400, $350 to $400. So that was not good. And then we had earnings on deck. So JD was at the lows here with earnings on tap. So if earnings were bad and this thing had like a 10% red day, as a result, that would have been catastrophic. We would have cracked this major support, embarking on new lows, just horrible. Thankfully, they had a positive earnings beat, a positive revenue beat. They beat expectations by a good amount. Very positive outlook. They're talking about share buybacks, a new share buyback program through 2027. So that was very good, very positive. And we are now at levels we haven't seen since January 12th. So this is very positive. This is technically, no, actually, no, it's not a new high. I wouldn't say it's a new high, or maybe you would, I don't know. Because obviously this has been in a pretty significant downtrend. Could this have been the new high right here, or the previous high, and now we're making a new high? Or would you say that this is the prior high that we have to get above? It can be subjective, but the fact of the matter is we have broken out of this range here that we've been in for a couple months to the upside, and hopefully it sustains it. I mean, we still have all day today. It's up 17% now. It got as high as 25.66. I have covered calls sold at 26. So there's that to look out for. Am I going to get a sign? Am I not? Earnings is out of the way, so the volatility has come back down to earth, at least relative to JD, or in JD's terms. And because we're not quite above my covered call, we're close but not above it, I'm in a very good spot to either let it expire worthless or roll it. Tomorrow's Thursday. I like to roll options no earlier than Thursday. So I'm going to let today ride out, and then tomorrow I'll have the green light to roll if I need to. And then Friday as well, if I need to. And that would be if JD starts to threaten 26 and gets above it. Because the best time to roll would be when your contracts are at the money and close to expiration. So we're already getting close to expiration. It's just a matter of, will they be at the money? I might not have to roll them at all if it does not get above 26, and then I can have them expire worthless and have a nice elevated JD, elevated share price to sell additional calls for next week. I'm very positive with how high JD can go. I think we can ride this thing up to $28, $29 up here. And I want to try to allow myself to do that. I want to defend my shares, defend my position. So if my covered calls get in the money, I want to see if I can roll them out so I don't have to sell my shares. I want to see if I can ride this thing up to $28, $29. So often I always sell, I sell calls close to my cost basis, not too far out of the money. And I get assigned early and I make a solid profit. I make the return I'm looking for, but I never capture some really good upside. I never allow myself or allow the shares to really go on a run to the upside. And I feel like I need to start doing that. I need to start allowing that to happen, because that's where you can get some serious profits. The most profits you're going to get with the wheel, or the highest profits you'll get, will come from stock, share appreciation. Premiums can only get you so much. If you really let your stocks go and run while collecting premium along the way, that's where you can really get some serious gains. Because if I get assigned at 26, that's a $500 stock profit on the shares, $500. So that'd be a huge boost to the account. So I want to try to allow myself to do that. These covered calls are already doing that. So at 26, really good spot. I love to see it rally, and I love to see it still below my covered call. It's a perfect scenario. I just hope, fingers crossed, that JD can sustain this. It's had positive momentum in the past, like a nice gap up 7% green day here, only for it to come back down anyway, because China's outlook isn't very strong. So I got to be mindful of that, but I really do think this can get up to 26, 27 bucks. So looking really good there because of JD earnings, and just we're waiting and seeing right now. Go to Mosaic next. Nothing new here. This was a covered call that I sold last week at 31.50, and we are just chilling around 31.50. So this is a 30-minute chart. You can see here we've been above 31, which is where I own the shares at $31. And luckily we've been above that, so my shares have been in the profit, and we're flirting around my covered call at 31.50, which isn't bad. It's not a bad problem to have. Again, the best time to roll is when your calls or puts are at the money and close to expiration. And if Mosaic stays around here, I'll have that scenario to where maybe I am able to roll the calls from 31.50 out to next week up to 32. That way I can give myself a little more upside on the shares. Maybe. In my last video, I did say I was perfectly willing to get rid of these shares and just move on from the position. So maybe I won't. Maybe I will keep that aggressive call and just with the intent to get out. We'll see. But right now, just kind of chilling right at my covered call. So nothing to worry about here. We actually have a dividend today, and I'm holding the shares. So that means I'm entitled to a 21-cent dividend. I have 100 shares, so $21 in dividend income will be coming my way. Looks like it's payable March 21st. So that's awesome. I actually have a Marathon Oil dividend coming in next week, so that's awesome. I'll have 2 dividends being paid out in March, so that'll help, and they'll be added to this dividend section over here on the wheel graphic, dividend profits. So that's awesome. All right, CSIQ. This one I've been playing. I had a $20 cash secured put sold in my weekly recap video. I already had it sold for this week in preparation of this week. And CSIQ had a rough go. Monday, it collapsed. Let's see here. Monday, it fell 3.5% or so. And then yesterday, on Tuesday, we fell another 3%. So it was down about 6% or more on the week to start Monday and Tuesday. And I already had the cash secured put sold, so there was no changing that. So yeah, we were threatened. This put was in the money yesterday. We closed around $19.70. So my $20 put was in the money. On this drawdown, I believe it was right around here on Monday. I don't know. I forget. I should know these things. But it was it was around here as CSIQ was selling off. I sold another put. When I saw that my $20 strike was being threatened, I was like, all right, looks like I might be getting shares at 20. Let's see if I can get another put sold at an even lower level. That way I can average the 2 lots together and get a really favorable cost basis. Because I can hold up to 200 shares of CSIQ. And right now I only have 1 put sold at 20. So I'm only looking to get 100 at 20. Which means the other 100, it can be picked up at a lower level. That's what I'm trying to do. I'm trying to stagger my orders to get into CSIQ. So on that sell-off, I sold another one at the $19 strike for another 15 cents. Could have gotten a lot more had I waited. You could have said that on both of these puts. But the reality is, I took the premium that equated to the 30% return on investment that I look for. So it was sufficient premium. It just could have been more, but at the very least met my minimum. So no complaints there. Luckily today we are up 2.5%. So CSIQ is finding some type of relief, some type of stopping of the bleeding here. But anything can happen. We still have a couple days left. The $20 puts are definitely at risk of being assigned, which I'm okay with. And the $19 put after today's upside here, not so much as threatened. But if for some reason these 2 puts do get assigned, I'll own shares at $19.50. 200 shares at an average cost basis of $19.50. And I am perfectly okay with that. I was just in this thing at $21, and now I'm going to be in it at $19.50. Sign me up. And prior to this, I played this last year with the wheel, and I had a cost basis of $22. So I was fine with that. I was fine with 21. I'm definitely going to be fine with $19.50. I'll be very happy. It'll be right at the bottom too, right at the bottom of this range, of this floor here. And I think it'll be a nice entry to see if this thing can benefit from rate cuts in the future, maybe in the back half of this year. So next up, we got DOCU. So this one is an earnings play. I've been watching DOCU, and I've been wanting to get into it in this demand zone, in this big green zone here, which is as low as $40, as high as $48. This is where I want to own it. You can see why. It's been supportive over a year now, about a year and a half. So I'd love to get in it. I like the company. It's a tech company as well, and you all know how much momentum can be in tech, so I'd like to get a piece of that. I like the company. It's in my price range. I want to get some shares down here in this green zone. However, it hasn't been in that green zone. It's been way up here, $60, $50. It's been coming down a little bit. It's at $53 right now, but it has earnings this week. So because of the earnings volatility, I'm able to sell puts way out of the money and still get pretty good premium. And way out of the money means the put is in the demand zone. I was able to sell it out of the money in the demand zone at $46. Right now, this blue box here is just showing you how far out of the money the put is. It's over 12% out of the money heading into earnings tomorrow night. So that's pretty safe. I think the expected move is about 8%, and I'm 12% out of the money. So that means this put probably a low chance of being assigned. And even if I do get assigned, I'd probably be pretty close to the share price. I mean, this thing would have to drop like 15 or more percent for me to get assigned and be greatly underwater. So I think it's pretty safe. I collected $27 for it. It's a pretty good chunk of change there. At the 46 strike, I'll be happy owning shares there. I'll be happy letting it expire worthless. So tomorrow night, Thursday night, will be earnings, and that'll be something to watch, something to monitor. And lastly, we have SOFI. SOFI is an interesting one. This is one that I've been watching for a while. I've been hearing about it a lot. There's a lot of popularity around it on YouTube. A couple guys I follow love to talk about it. And I've been monitoring it and watching it, but I haven't gone into it. I've always said no because they haven't been profitable. That's a big part of my rules. A lot of companies with high upside generally aren't profitable. A lot of tech companies don't even operate at a profit. But yet their shares can go bonkers and you can make really good returns. I get that. But for me to feel comfortable, for me to sleep well at night when a position is going against me, I want to make sure that they operate at a profit. Because if a company is not making money and my position's down like 30%, I'm not going to feel comfortable in that position. I'm not going to feel confident that that stock is going to rebound because they're not even making money. That's all I need to know to make me a little uneasy. And SoFi wasn't making money until last quarter. Last quarter, it actually reported, I'll bring up some data here, a positive EPS reading of 2 cents. Everything before that was below zero, earnings per share, EPS. That means they were operating at a loss. Now they're profitable. They finally reached GAAP profitability, and the CEO expects them to continue to be profitable from here on out, which is great. And doing some research, reading a lot about it, reading Morningstar reports and stuff, I did get attracted to the idea, to the business model. It's a one-stop shop in terms of financing. It's a bank, it's an online bank, offers lending, offers investing. I mean, you can see the profile here. It's a financial service platform which engages in the provision of student loan refinancing options to the private student loan market. It offers home loans, personal loans, and credit cards. It operates through the following segments: lending, technology platform, and financial services. It's a one-stop shop. They're trying to make sure that they attract customers, and SoFi is all they'll need. Whether they want loans, whether they want banking, whether they want investments, investment management, it's all right there. And it's all online too. There's no physical locations. It's an app. It's a website. That's all it is. And they're trying to attract, their preferred demographic is young, wealthy people. Or not necessarily like stupid rich, but just like young kids who have money. They want to attract them and secure them as their clientele. And I think that's a pretty good approach because honestly, the young generations, really young millennials, Gen Z, the generation after them, which I think is Alpha, but I might be wrong. Let's be honest. Heavily introverted. Love technology, love social media, born with the phone in their hand, and lacking of social skills. Majority, mostly. That's a stereotype, and I do think it's true for the most part. I think the new generation will be attracted to something like SoFi because they don't have to go into a physical location. They don't have to talk to a lender face-to-face or a bank teller face-to-face. It's all online. They can avoid all that together, which I'm sure they'd like because probably introverted and prefer technology anyways. I think it's a pretty good business model that will attract this new generation of people who, as years go on, will begin to open bank accounts, will begin to take out loans and student loans and stuff. So I think the business model is pretty good. They're finally profitable. And as you zoom out, this really isn't a terrible spot to begin buying shares. Its all-time low was around $4, which is about like a 50% reduction or a little bit less than where we are now. So I guess they could fall quite a bit. But that's why I'm only taking a stab, a small stab, trying to pick up 200 shares at 750, which over the past 9 months or so has really been the floor. So if it sustains this section right here, I'm getting a pretty good value. If it gets back into this section, that's when we'll have some problems, but I'll be able to add to the position and average down because I'm only starting with 200 shares, which is $1,500. I can put up to $5,000 in any position. I'm starting with 1,500 at the 750 strike. And I decided to get in this after doing my research and seeing that it was down like 10% to start yesterday. I decided to sell a put right around here. Little did I know it was going to drop another 8% and get all the way down to $7.25. So my put that I opened on Tuesday became in the money on Tuesday. So I could have gotten a lot better premium, or I could have gotten a lower strike. Coulda, woulda, shoulda. But I ended up with the 750 strike, sold 2 of them for 10 cents. And today, thankfully, we are up. We're 3%. We're up 3%. Luckily, not down to $6. So that means if I do get assigned, hopefully I'll be close to the share price. Right now, my put is at the money. I have the 750 strike at the money. SOFI rallied above 750. It's at 751. So my puts were out of the money for a second. They still are technically, but we're right there. We're not underwater anymore. So we'll see. We still have all day today, Thursday, and Friday. A lot can change, but I'm thinking that this area will be some decent support. We're already seeing it. And you know what? I'll be happy picking up some shares here at 750. And if it does tank, I can add some more shares around 550, around 450, probably get an average around $6 or less in the event that it really does fall. So this is where we are. SOFI, let's see what it's all about. I stand to collect $20 there on the week. DOCU, I stand to collect 27 at the 46 strike, $27. CSIQ, I stand to collect $30 on 2 puts. Mosaic, I stand to collect 33 on the covered call, and then JD, I stand to collect 30 on the covered call. Possibly $500 extra if my shares get called away. But all in all, with my sold options, I stand to collect $170 this week if they all go to zero. So that's very good. I'm set up nicely for the week. A lot of open positions, a lot of things going on, moving parts, a lot of moving stocks as well. So a wild week so far. Red Tuesday, red Monday, very green Wednesday. Let's see what Thursday and Friday brings. I will be back with a weekly recap video to wrap up the week and show you guys exactly how it all went down. So until then, thank you for watching. If you enjoyed, hit that like button, subscribe for more content, and I'll see you all next time.